the base case for 2030 was roughly $650,000. However, what has just happened, the green light from the SEC, we believe will cause the institutional participation to move towards the bull end of our set of assumptions. Probability of the bull case, the 1.5 million, has gone up. Our bull case is $1.5 million by 2030.
In the next 5 years, again, there's a finite supply, and now we have a potentially huge increase in demand with a spot Bitcoin approval. So I think in 5 years, something around 500,000 would be potentially achievable.
In this interview, ARK Invest CEO Cathie Wood is joined by Ophelia Snyder, co-founder of 21 Shares. The two women are jointly responsible for the ARKB Spot ETF that is currently third in market cap behind BlackRock's IBIT and Fidelity's FBTC. During the interview, they discuss a variety of topics. Cathie starts off by discussing her long-term predictions for Bitcoin prices and the impact of the approval of the ETFs. As the hype of the ETF launch has mostly died off, there's not a lot of discussion about the ETFs, but Cathie discusses why their biggest impact is still yet to come. They also discuss ETFs for other digital assets, especially Ethereum. The video is capped off with an excerpt from Matt Hoogan's memo to financial advisors. Let's jump right in.
Cathie, you called for I think it was 1.5 million Bitcoin. I forget when you made that call, but I think the call is 1.5 million by 2027. Curious how you still think about that call.
So that's by 2030. It was
2030,
by 2030. And it stands, but I'll tell you, that is the bull case. The base case for 2030 was roughly $650,000. However, what has just happened, the green light from the SEC, we believe will cause the institutional participation to move towards the bull end of our set of assumptions, which was closer to the 5% asset allocation to Bitcoin over time. So we think that probability has gone up. So the probability of the bull case, the 1.5 million, has gone up.
Cathie has just given out her price predictions for 2030 and explained that the SEC's approval of the spot ETFs leads her to believe that $1.5 million per Bitcoin is even more realistic.
Breaking news, the Securities and Exchange Commission has indeed approved 10 spot Bitcoin ETFs here.
Hi, Morgan. We are just getting word from the SEC that a wave of Bitcoin ETFs have been approved. The SEC just putting out.
The ETFs have traded for about 3 months at this point, and the initial hype is largely dead. But in reality, these ETFs continue to perform. Choppy price action might not be helping the matter, but Cathie explains that the full impact of the ETFs has not even begun to be felt. She explains that institutional adoption has not even begun. It is because of this that she is confident that there is now significantly higher upside potential for Bitcoin. She's about to explain why wirehouses like Wells Fargo and Merrill Lynch are the next wave, and why they're not here yet in spite of the approvals.
Actually, with the wirehouses, I'd love to know why this is kind of the next important unlock and when this comes, and would love to have a conversation around that.
And what we're learning is that wirehouses, when they learned that 11 of us were going after this market, the first thing they have been doing due diligence, but they're not going to do due diligence on all 11, and they know not all 11 will make it, that they're probably, Philly, I don't know what you say, but I say 3 or 4 make it. I guess I have to say 3 because of
3 to 5.
Galaxy had its conference call yesterday, and according to Galaxy, Invesco is waiting for wealth managers to put crypto on their platforms to approve. And maybe Invesco is very good in that space. So each one has a strength. Now, what we feel great about is while most of our ETFs are distributed through the wirehouses, so Morgan Stanley, UBS, Bank of America, Merrill Lynch, Wells Fargo, not one of them has put us on its platform. And why is this? They wanted to see who the survivors were going to be. They do not want to put their clients' money into a fund that will ultimately shut down. So I think that is becoming clearer, although you will have each one of the the bottom 6 or 7 saying, no, you have to give us until this happens. In the case of Invesco, I guess it's the wealth managers. We have not had our primary clients buy into this yet. They're doing due diligence on a lot of things, critically on infrastructure and ops, and through booms, busts, through halvings, through forks, through airdrops. And, those are all events that traditional asset managers are not, they've not been through some of them. So that's the first thing they're looking at. They're really doing in-depth research on this. And I'm sure Ophelia will get into that a bit more. They also need to know that their clients and they are going to be supported by 2 things: research, and we give our research away, as does 21 Shares. Research, and we're prolific. We're putting something out every week on something in the digital asset space. And they need to know that they, whether they're advisors or other asset allocators, are going to be able to call someone who really understands the space. And so Resolute, our distribution partner, has been working with us since 2016. And I remember the most senior ETF specialist laughs because as she was coming to her interview, apparently she had to look up what Bitcoin was in 2016. Now, they have to know a lot more than what Bitcoin is. They have to know a lot about Bitcoin and these other digital assets now that we're putting out these other funds.
Wirehouses are the final frontier, and they ultimately will cause the most significant movement of the needle. But even though these entities have been forced to acknowledge Bitcoin's existence, they are still grappling with acknowledging its potential. Cathie has explained that even though some of these wirehouses have allowed their customers to access the ETFs on demand, they are still not providing easy access for their customers. She believes this will soon change, and that it will spark the real frenzy. Matt later makes statements along the same lines, but before that, Ophelia discusses the approval of other digital asset spot ETFs.
I think it's really important to understand why these things get approved, because I think there's a misconception on the logic. So the Bitcoin ETF got approved on the basis of a lawsuit, not because there was a fundamental change of heart of the regulator. So just start with that, right? So this is a direct result of the judiciary challenging a policy of regulation through enforcement. Specifically, there was a lawsuit on this topic. That was it. Now, assuming you look at this as a point in time, you then need to look at what's the basis for that. And it comes down to, typically speaking, like 2 things. There are 2 key components. One is market microstructure. So, for example, you need to have a large exchange of significant size, like the futures market, that is regulated and overseen, something like CME, that is very, very closely correlated to the underlying asset price, so that asset price discoverability is there. Pricing discoverability is there, right? There's a bunch of check boxes on like, what does the market structure look like and does it actually meet criteria? And those criteria have largely been set by prior rejections of the Bitcoin ETF, but there's some precedent for them. The other thing you need is, in order to list a financial product of any kind, you need to have categorized the underlying asset. Now, there are a bunch of lawsuits in the United States right now, including one with Coinbase, including one with Binance, specifically about what are these things, right? And we've been reading about that quite a bit, and it's coming down to what features do they have, what does utility look like, how is the ICO run, what is the underlying use case of this asset, why are people buying it, where are they buying it, what constitutes an investment contract, etc. So the issue is that if you don't have clarity on that, it makes it very difficult to then package a product off of it. Now, as you mentioned, Ethereum is pretty clear cut, it's commodity. Easy, right? And it's pretty well established in the United States also. So that's a very different conversation. But once you get beyond that, you're talking about some of these other assets, there's not a lot of clarity on that topic within the US framework. Now, those are the only 2 reasons. There's nothing inherent to those assets that creates a problem. We run a nearly $1 billion Solana product in the European market with no issues and have for years. And it stakes, and the staking yields compound to the product, no issues. No tax issues, no regulatory issues. It works in Switzerland. That second question is clear. You can package them this way. They have a clear status that solves this issue. I think the one thing that gives me some hope here, and I think I'm less bearish on this than others, is that there's not a lot of differences between these filings for Ethereum and the filings for Bitcoin. They're the same structure, the same custodians, the same disclosures. It's very internally consistent. That means there's less to look at, right?
Yeah.
And there's less to look at given that these were only done a couple months ago. So there's also that, right? If these had been done 20 years ago, that would be a different discussion and you might want to revisit it. But given how fresh most of the documentation is, that's the one thing I think that puts me at a, let's say, more optimistic than it seems like most let's call it, most markets would put it today.
Yeah.
Ophelia has just concluded her explanation on what needs to occur before any digital asset can get a spot ETF. She doesn't think any cryptocurrencies aside Ethereum stand any chance of getting an ETF in 2024, and that even 2025 is unlikely depending on the results of the elections in November. She's, however, more bullish on the probability of an Ethereum ETF than most other experts in the space. She's explained that the reason for her confidence comes down to the fact that the Bitcoin spot ETF filings and Ethereum ETF filings are fundamentally the same. The only major difference is staking, but she's confident a middle ground can be reached quickly. In other news, Bitwise CIO Matt Hoogan, in his weekly memo aimed at professional investors, explained why he, like Cathie, believes the financially significant adoption fueled by the ETFs has not begun. The excerpt from the memo reads, Bitcoin ETFs have attracted more than $7.5 billion in net new assets since launching in the US on January 11th, making many of them among the most successful ETF launches of all time. The top question on everyone's mind, who's buying them, retail or professional investors? One of the great promises of the Bitcoin ETF was that it would open up the Bitcoin market to professional investors. So has it? Yes. Over the past 7 weeks, we at Bitwise have heard from each of the following groups that they are buying Bitcoin ETFs. Individual retail investors, RIAs, family offices, hedge funds, venture capital funds, asset managers. Just as important as who is buying today is who will be buying tomorrow at Bitwise, and I'd assume at other Bitcoin ETF issuers, we are having serious due diligence discussions with major wirehouses, institutional consultants, large corporations. These are massive categories, representing trillions of dollars in assets. Based on current trends, I'd suspect we'll see our first significant flows from these three groups in Q2 2024. And I think those flows will accelerate throughout the year as these investors become more comfortable with the new products. Matt believes that the real institutional players have not begun to allocate into Bitcoin yet, and that we should expect to see them as Q2 begins. It's hard not to be excited at the premise of wirehouses like Merrill Lynch and Wells Fargo selling the Bitcoin agenda, and Matt believes this will soon become a reality. What do you think about Matt's bullishness and Cathie's price predictions? To see the latest in crypto news, watch this video here.